Welcome back to Alpha Recap. Thanks for tuning in. Markets closed mixed today after a headline-driven day that favored crypto, utilities, and materials, while a few other sectors took a pause. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to have you. So, what really stands out here is how targeted the moves were. Not a broad risk-on day, but very specific winners and losers.
Exactly. Bitcoin jumped back into the high 60s, above about $69,000, and that alone set the tone for a lot of crypto-linked flows and product announcements from banks and exchanges.
Yeah, that tracks. Momentum in Bitcoin tends to pull in fintechs and custody plays, even if the rest of the market is cautious.
And then on the policy side, the Department of Energy announced a loan that really moved the utilities complex. A loan of about $26.5 billion for Southern Company. That was a clear tailwind for renewables and grid modernization names.
Big headline. I mean, when you step back and look at this, concentrated policy capital has real teeth. That kind of financing reduces project risk and speeds procurement.
Right, and the market reflected that. Utilities and battery-related names ran hard on those financing and licensing headlines.
Materials had a big day too. Appia reported a 300-meter intercept at about 2.5% total rare earth oxides. That's the sort of discovery that attracts strategic buyers and downstream interest.
Appia's result was exactly the kind of data point that feeds the onshoring and supply security narrative. Add national moves in Indonesia and Australia on nickel and coal, and miners were in the spotlight.
Big move.
Communications had pockets of strength too. One notable media name announced a $1 billion buyback, and that lifted some content and tower-related stocks.
Not what anyone expected.
On the downside, healthcare had a rough patch. A surprise FDA rejection and Medicare Advantage distribution noise pressured biotech and medtech names. That created a fair bit of uncertainty.
Yeah, healthcare felt the hit. Regulatory setbacks like that tend to compress valuations for smaller names until clarity returns.
Consumer and retail were mixed but generally biased lower. Some retailers warned there was tariff pressure on footwear, and guidance resets from a few big-box names left investors cautious.
Right. And the other thing is inventory and margin pressure show up quickly for those names. Winners were the ones with pricing power or strong direct-to-consumer execution.
Industrials were uneven. There were some positive shifts, like Apple moving Mac Mini production stateside, but there was also a big export penalty for a major semiconductor equipment supplier, about $252.5 million, which added caution around CapEx and supply chains.
Honestly, I was a bit surprised by this one.
Technology overall was a split card. You had big device launches and massive private financing rounds on one side, and energy obligations for AI data centers and regulatory pressure on the other.
And that energy angle is a common thread. Data center power needs linked tech, utilities, and energy. If compute obligations tighten, it ricochets across all those sectors.
Exactly. So policy and capital were the amplifiers today. A federal loan here, licensing deals there, and materials discoveries all feeding into a few concentrated rallies, rather than broad market strength.
Short and sweet. Selective rallies, not a blanket rally. Investors needed to be picky.
Let's unpack a few of those big moves and why they matter. First, Bitcoin above about $69,000. That mattered because momentum can accelerate institutional product launches and flows into custody and miner equities.
Second, the DOE loan was structural. $26.5 billion is not pocket change. It makes big projects easier to finance and expands markets for battery integrators and grid vendors.
Third, Appia's drill results around rare earths feed the strategic supply chain story. Trios matter for electric vehicles, wind turbines, and defense electronics. So that kind of headline pulls M&A interest.
Fourth, the $1 billion buyback was a classic EPS support move. Buybacks can lift sentiment across media and tower stocks because they shrink share count and signal management confidence.
And fifth, export penalties and tariffs. like the $252.5 million export penalty and the new 126% tariff on certain imported solar panels, changed supply chain economics in a hurry.
That solar tariff is massive. It essentially shifts advantage to domestic and ally-based producers and makes imported panels much more expensive for developers.
So what did the flow actually feel like on the trading desk? My read? Risk appetite in crypto and renewables, buying into materials on supply security headlines, while healthcare, consumer, and parts of industrials got whacked by regulatory or guidance risk.
And on the cross-sector themes, a few stood out: policy and capital concentration, energy consumption of compute, onshoring and strategic supply chains, and regulation as the wild card.
Let's make this practical. What would we have done with portfolios? The report had some neat, actionable ideas. For utilities and renewables, it suggested favoring players with policy-backed balance sheet support.
How would you do that in simple terms? Overweight big regulated utilities with transmission scale and manufacturers tied to grid, storage, and IP licensing. But hedge. Policy can flip.
Materials. Increase exposure selectively. Tilt to producers with advanced projects and offtake deals. Avoid the pure explorers unless you like binary outcomes and M&A-style risk.
Treat crypto as tactical. If you'd locked gains on some of the rally, consider trailing stops, hedges, or leaning into regulated custody providers to cut counterparty risk.
Consumer. Be selective. Favor brands with pricing power and omni-channel execution. Avoid low-margin, import-heavy apparel and footwear until tariff clarity improves.
Healthcare. Reduce conviction in microcaps until regulatory clarity returns. Bigger, diversified healthcare names weather these shocks better.
Semiconductor equipment. Watch export control headlines. That $252.5 million penalty is a reminder that trade rules can hit CapEx cycles hard.
For tech, target companies with manageable energy intensity or vertical integration into energy solutions. Data center energy obligations can be an earnings and capital story.
Quick reactions. 3 things we'll be watching over the next couple of weeks. DOE procurement milestones and project awards, regulatory updates in crypto, and developments on solar tariffs.
Also, keep an eye on any follow-up assays in rare earths and nickel, and clinical calendars for healthcare names hit today.
Risks? Policy reversals, a sudden crypto regulatory move, noisy discovery headlines that don't pan out, and persistent regulatory shocks in healthcare and industrials.
Interesting trade.
Before we close, a few clear takeaways. 1. Today rewarded selective, policy, and capital-linked names rather than broad exposure. 2. Regulatory moves and tariffs can re-rate sectors very quickly, so manage headline risk. 3. Supply chain and onshoring themes are real and are supporting materials and domestic manufacturing narratives.
Short version: be picky, size carefully, and use hedges where headlines can cause big swings.
If you want to dive deeper into any of the sectors we discussed, head to stockalpha.ai. And as always, if you have questions about anything we covered today, you can ask us directly at stockalpha.ai and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with more sector recaps and tactical ideas. Cheers.